Welcome in, everybody. Happy Sunday. It's IA Weekly Q&A time. So, interesting set of questions came in today, and for the first time ever, we're actually going to do video introductions of the questions from the people themselves, and they all come from Patreon. So, big thank you to everybody who submitted their questions, and I wasn't able to get to all of the questions, but we have some good ones in the pipe as well for the future. So first of all, we're going to talk today about portfolio management, crypto bear market, how to take profits, inflation hedges, and a whole bunch more. And these seem to be the things that are on people's minds right now more than anything else. So before we jump in, though, I would like to wish all the crypto mothers out there a very happy Mother's Day, the most important people in the world. So a big thank you, and have a great day, everybody. Spoil your mom's rotten, if you're not a mom yourself. And this channel is about math, money, and freedom. And disclaimer, of course, as well, none of this is investment advice, this is edutainment. So thank you for jumping in. So first of all, the first question is from DanJT.
Got about $1 million portfolio, although no new income at the time. The portfolio is about 80% in Tesla. The rest of it is in Bitcoin, Ethereum, Coinbase, and MicroStrategies with a few alts. Now, I absolutely love the Tesla, and I really hate to sell it, but all the same, I feel like I'm a little bit underweight on the crypto. Can you tell me how you think about portfolio balance and the maths that you put into that kind of thing?
So in order to answer Dan's question, we need to look at his situation today. So congratulations on the great portfolio. It was probably up a lot more when Tesla was up even stronger, but it's been quite weak of late. And this can very quickly happen when you get into a position early in a winning stock or crypto. It can really put things out of balance. So I put together a rough estimate as to what the portfolio, again, a guesstimate of what it looks like. It's 80% Tesla, about 9% Bitcoin, about 9% Ethereum, a little bit of MicroStrategy, a little bit of Coinbase, and some altcoins. So the question is, what would you do? Where would you go from here? So very quickly, the rule of thumb in my book, again, not investment advice, is what I call the rule of thirds. So imagine you have all of your net worth. You should typically allocate something like this. You would have 1/3 in real estate, which is the home you live, or maybe some rental properties. You have 1/3 in your cash, pension, 401k, ISA, IRA, tax deferred benefit scheme, whatever the case may be. And that would typically be invested in mutual funds. And then you'd have 1/3 of your portfolio in stocks. And then I break that third that's in stocks and crypto into a nice mix of things. Maybe some mutual funds, maybe some ETFs, and some high beta stocks, which means risky stocks like Tesla and crypto. So that's typically the way that would work. Now, another way of looking at this with real numbers, if you have $1 million portfolio, you would have $330,000 in real estate, $330,000 in cash, pensions, 401k, and the other $330K in crypto and stocks. Now, depending on your risk profile and your age, you can skew heavier towards more crypto and more disruptive stocks, or you could even increase that third of your entire net worth into maybe 50%, depending on exactly how young you are and your financial situation and what your goals are. So it's hard for me to answer exactly what I would do, but here are some recommendations if I was in your shoes. So first of all, there's too much Tesla in the portfolio concentration. I am in a similar type of situation between too much Bitcoin and Bitcoin proxies, but your crypto share also could move up to 20% of your entire portfolio, and it's not quite there yet. And then think about safer plays in the event of a bear market. So that could be things like maybe some biotech stocks or some value type plays that would be stronger in a bear market. So just some suggestions, but definitely you have way too much Tesla. So the other thing to think about is we all know Tesla is going to $1,200 to $3,000, maybe $5,000 over the next 1, 3, and 5 years. So the future is very bright, but still it's better to diversify more and maybe have more crypto considering where we are, but also be prepared to rebalance as we go forward. Oh, and Dan, thank you so much for your question. The second video question is from John. And again, kind of related, but kind of not. His question is here.
What allocation of stocks to crypto would you recommend for somebody in their 50s?
This is John, great question. And it's not that trivial. But first thing I want to share with everybody and yourself is when you think about crypto, you think about bonds, cash, real estate, equities, emerging markets, commodities, and then the crypto efficient frontier. Obviously, the higher return, the higher the risk. So I thought it'd be helpful to put things kind of on a chart. Now, in light of that as well, you'll see here, obviously cash is what people perceive typically to be the least risky asset. However, with the deflation, I would say that is not true. But anyway, that's the efficient frontier. So it's always important to keep in mind what that means in terms of crypto. And crypto also is a very big category. You have your Bitcoin, your pristine blue chip, then you've got your Ethereum, and then you've got a whole bunch of other stuff down the line. So the further you go down the line, the further out you go on the risk frontier. So it's important as well to always bear that in mind. So you should expect very big returns. For example, Dogecoin, I think if you invested $1,000 at the beginning of the year, you'd have $120,000 today. So, but it comes with a lot of risk. Now, the second point as well that we need to consider is as we age, we need to reduce risk. So this is a chart that I put together. Again, not investment advice, but very rough ideas of allocations based on the amount of years that they have worked. 25-year-old has already worked 3 years. A 45-year-old should have worked about 23 years. And so on. And as you get older, you need to reduce the amount of stocks and crypto that you actually have for safety reasons. And you can see as well, ultimately slowly increase your cash and of course your real estate up until a certain point. So keep that in mind. And in terms of some of the conclusions to your questions, I've laid out a few pointers. First of all, a lot of people recommend your crypto limit is set to be 5 to 20% of your portfolio. So that does not include equities. If you go to the previous question, you saw the optimal portfolio matching of the thirds. So going back to that, you got your 1/3, 1/3, 1/3. Make sure you have the balance. And as long as you got 2/3 in safe assets, then you could potentially go half of that 1/3 into crypto that remains. And everybody needs some Bitcoin. And make sure as well, very important to remember, that the investment that you make, say in crypto, will not be required for withdrawal over the next 4 years because, heaven forbid, there's always a 1% chance that things could go down or there could be a very bad crypto winter. And you need to be able to wait. If you got caught off guard, you need to be able to wait for a rebound for that to happen. So just some kind of ideas when you make your own decisions and do your own research. But that would be some of the things that I see. So the third video is from Christopher. Roll the tape.
Of the bull market, should we convert anything to BTC and Ether, or maybe just 33% of it and the other in a stable USD coin maybe?
So this is a great question from Christopher. What to do at the end of the bull market? Convert whatever your old coin balance is to Bitcoin or Ethereum, or move it to stablecoins, or move a portion. So first of all, there's a couple of things to look at. Number one, it's very, very hard to time the top of the market. We know that this bull market cycle for Bitcoin could go to $100, $200, $300, $400,000. Some say even $1 million. Timing the top is hard, but now many say that the bottom could still be near $100,000. So if we're at 57,000, 58,000 today, we go to $100,000 and then we go all the way up and then come back down again. It's very difficult to nail that top and nail that bottom, but just think of how you would do that. Now I'm coming out with an exit plan. In the future, I don't want to launch it just yet because I don't want to alarm people and prompt them to sell too early because that would be a shame. But at the same time, let's go to some of the conclusions and what I would do in this situation and things you need to bear in mind too. First of all, yes, it is a good idea to offload high-risk crypto, like the efficient frontier chart that I discussed in the previous session. Get rid of the high beta altcoins and convert some to cash and wait for a dip to be able to get into good positions at lower prices if there is a dip. And then can maybe convert some to blue chip, like you said, like Bitcoin or Ethereum. That's also a very good idea. Now, when it comes to USDC or other stable coins, remember the USDC, for example, is pegged to the US dollar, and therefore it is depreciating. The currency is debasing. So bear that in mind. So you need to get a good 10% yield on your USDC to be able to remove the risk. of losing value. But I prefer to be in a position to move fast, which means I like to have access to my resources to take advantage of market opportunities and not necessarily have things locked up. It's also very, very important to take into account tax ramifications as well as you go forward. So use all these little elements to make good decisions as well as we go forward. So next question is from Beijing.
Hey James, greetings from Beijing. So my question was, after you take out your initial investment, what do you do with it? Put it in cash or invest it into something safe like BTC?
So Preston, great question. What to do? So first of all, recap for others who may not know exactly what Preston means, but I always talk about taking profits and taking your initial investment off the table and place it in safer investments. So for example, imagine you invested $1,000 in Dogecoin and now it's worth $120,000. Well, it's probably a bad example, but you'd initially take your $1,000 off the table and invest it somewhere else. And the beauty of that is that means you're just playing with the house's money afterwards. So the worst case scenario is you're going to go home without making any losses. But if you do make a lot of money on a very high beta altcoin, take a lot more off and put it in safer places. So I don't put it all into something like Bitcoin or Ethereum. But what I do look at is the following. First of all, I check again tax ramifications, because if it's a short-term capital gain, you need to save half of it to pay taxes in some jurisdictions. Also, I like to get into a position what I believe is the most upside, tied to safety. So for example, it could be Bitcoin or Ethereum or Tesla or Square or Shopify or real estate, for example. And I'm very patient and I time my entry. But imagine a situation where some piece of bad news comes out for Tesla and the stock plummets down to $250. Well, I'd back up the truck and load it up full of Tesla. So you need to be in a position to move fast and take advantage of certain market opportunities when they exist, and be brave when you can identify them and jump in. I've always been a contrarian. When everybody's running for the door, I'm running into the building. So think about that too. So great question, Preston. Hope that helps. Again, no straight answer where to put your winnings from other altcoins, but having Bitcoin is good. As you know, I'm a big Bitcoin bull, and Ethereum as well, as long as it's not run too far. So we're very close to 4,000 now, and it's quite a high price. So the next question, Doctor.
I want to thank you for all you do, and I had a quick question. What assets would you recommend long term? I know with inflation, that's one of my major concerns, and I'm invested in cryptocurrency, but I'm also looking at real estate, and I wanted to see what other things you suggest.
So I love this question from Dr. Harvey. Thank you so much. And it is very, very important. So I have a couple of answers regarding the best hedges against inflation. First of all, obviously, crypto is huge. It is an asymmetric bet. So Bitcoin and Ethereum, typically many recommend having 5 to 20% holdings in those areas. It seems strange, actually, let me jump out for a second, that all of the questions today from all of you are worried about your portfolio concentrations, your portfolio management, swapping in and out of different types of assets, taking profits, and hedging. And these are all the right things for you all to be thinking about. So jumping back in here, having crypto, again, up to that 5 to 20% of your portfolio is typically recommended. In fact, Ray Dalio, as I mentioned before, said 20% is a good allocation to crypto. But I believe crypto means mostly, we're talking 90-95% Bitcoin and Ethereum. Disruption, that's the second category that I believe is a very good hedge against inflation. So things like Tesla, Invite, Shopify, Square, again, maybe 10 to 20% of your holdings should be in these types of assets, and these will stay ahead of inflation because they are facing hyper growth as we go forward. The third one is real estate. So your home, that should be 20 to 30% of your portfolio. And again, it keeps up and helps as long as you have 80% mortgage on your property, so you can borrow as much as you can, and being levered is good. Again, as I always say, borrowing fiat for both tax reasons and take advantage of the low interest rates so that are far below inflation is a very good thing. And it's also important to be in a fast growing home market. So for example, if you look at some markets today, like Austin, Texas, Boise, Idaho, and other places in Germany that are growing very quickly. Look at the market and look at the other areas, other aspects for making decisions. The other thing that's very important is revenue generating real estate, for example, rentals, again, in fast growing markets. And make sure you have a 6% cap rate. And just as a refresher, a cap rate is the net operating income of the properties divided by the property price. And I like to get at least a 6% cap rate on properties, or else it's not worth investing. But they are very safe bets. The other thing actually is commodities. And you've heard me talk about silver before, not gold, but silver. And I think silver has some good upside, especially with all the industrial usage going forward. And then stock market, the S&P 500 typically will grow 7% per year. And that's also a good hedge. So they are just some of the things that I think about, but identify a couple, 3 or 4 that fit your profile. Maybe you have some already. Maybe refinance your house and use that extra money, equity, to invest in other areas too. So thank you for the question, Dr. Harvey. And the final question, fun question of the day from Jables, aka Dio.
Hi, James. This is Dio, also known as Jables in our community. I am here with a fun question in St. Cloud, Minnesota, visiting with my beautiful wife.
Hi.
And the question is, I feel like poop because I'm sick. So what kind of things do you do to help you feel healthier and better? And that's it. Take care. Thank you, Patreon capitalists. Bye.
So I like this question. And there's a couple of things I'd like to say. First of all, health is wealth. There's no point in focusing very hard and building a brilliant portfolio and making a lot of money in the market if you don't have the health to enjoy it. So again, that should be a number one priority for everybody. Second issue, I put together a quick little diagram of what I do when I don't feel well. First of all, it's very important to build up your nutritional defense, which means you have to eat a lot of garlic and citrus and fruits and berries. I eat blueberries and blackberries every single day. Broccoli, spinach, Brussels sprouts every single day. Tons of vitamin C, vitamin D, vitamin B, and zinc. You eat this stuff every day, you will never get sick. Second thing is basic remedies. I drink a lot of white tea. If I feel something coming on, I add honey and lemon to it, ginger, and sleep with a humidifier at night. And a peppermint diffuser runs in my office during the day the whole time. Third thing is exercise. Exercise is very, very important. Walk at least 10,000 steps a day. Run, bike, hike, whatever you like to do. Walk the dog 4 times a day, you name it. And if you have a steam room or sauna, that's fantastic, as well as fresh air and sunlight. And finally, what I call the tip of the spear is turmeric. I add turmeric to everything. You got a sore ankle or a sore knee or arthritis, just pump that into your salads, into your smoothies, add it into your eggs, whatever you want. Mix it with coconut water. It's so easy to digest and it tastes quite good too. And many say it prevents heart disease, Alzheimer's and cancer and a whole bunch more. So that's what I do. I love the question and very interesting question. And I hope that answers you going forward. Again, everybody stay healthy. Eat turmeric every day, berries, seeds, nuts, all that good stuff. Leafy green vegetables, and you'll never get sick. So big thank you to everybody for all the great questions. And if you like this type of content, hit the like, subscribe. We'll be doing this every week, and let me know in the comments below if you like this video format. It's great to see the people that we engage with on Patreon every day, and I want to thank everybody once again for the questions. Take care. Bye.